Hey traders, Corey Mitchell here, and I found today very interesting in the Euro USD, mainly because it was a ranging day, yet there were still some opportunities. But as always, we really need to pick our spots and learn how to look at context. So the strategies on their own are very useful, but I find that most people don't really follow them, and they're not really looking at the things to watch out for that were discussed in the trading course. And I also just added in a new context video, which was added to the end of this course, so I'll put this video on that page as well. And it's just a few more examples of things to watch for. And I really want to stress the point that we do not want to guess where the price is going to go, as I said here. So when we have a situation like this, so we're basically just going to go through this day and the thinking process and all these notes, and hopefully that helps you pump the brakes when you need to and hit the gas when you need to. So this actually all started back here during the London session. We had a nice uptrend, then we had this drop, and I wasn't trading during this time. And then we have this rally, and it doesn't get up to these prior highs. And then we can see the next drop. So, maybe you thought this was going to go higher and you took a trend continuation trade. That's totally fine. Would have been a loss. But once we get this next wave down, you can see that we're starting to move inside prior waves. Already at this point, we have evidence that the price is contracting. And what does that tell us? That the price moves are getting smaller, which is going to make it harder for the price to hit our targets. If these were really big, it probably wouldn't be an issue, but you can see they're getting smaller. This one was only about 10 pips. Then we're getting a little less than 10 pips. It just keeps contracting. Or actually, this one's probably about 15 pips. This one's about 12 pips. This one's 10 pips exactly. This one's maybe a little less than 10 pips. This drop's only about 5 pips. And yeah, like I say here, we're eventually going to get that breakout. The problem is when we're trading a 1 minute chart, you could lose your entire day. We have risk controls for daily risk limits, so we're only allowed to usually take a few losses in a row, and then we're done for the day, just to control how much we lose in a single day. So you could have potentially have lost everything just trading this, and you're hoping for that breakout, but we don't want to trade based on hope. So during this period, we just would have taken off. Then what we're waiting for is, let's say this would have shot up a little bit. That scenario has now changed, right? Because now we've made a higher swing high. We've broken out of this converging type action. And then if we had a little bit of a pullback and a move up, that could be a trend continuation trade. Unfortunately, this one just ran straight away. Nice drop here. And then you can see throughout we had this big drop and we're just stuck. So unless there's enough movement for the price to hit your target within the range, or using like the magnet areas, which we'll talk about in a second, then there's not really a lot of trading opportunity in here. And I wasn't trading during this time, so I haven't really gone through to look during the London session what the trades were, because I was trading over here. But that was just an example to note when the price gets stuck, and it gets stuck again here, where we have a little bit bigger drop and we have a move up. And you could take this as a possible trend continuation trade. Again, I wasn't trading during this time. I don't start till later in the day. So you could take that as a trend continuation trade because we'd had the move up. We have, at that point, a little bit higher swing high, higher swing low coming in here. So that one wouldn't be too bad. But we have to note that we are in low movement. So unless your target is, below this prior high, and especially below this prior high, we don't want to be too aggressive with that target. So if this gets up near those prior levels and starts to reverse, consider taking your profits. The price did what you expected to. It's just we already know it's choppy. We can see it here. The price is stuck. It's not moving out of this range very much. So we don't want to assume that it's going to. So that was a possibility. If we didn't take that one, then we can see it's stuck again. This high gets stuck below this high. We drop. It's inside of this wave. We're just, we're stuck inside what I called old price moves. So we had one break price move, this one, and then we're stuck inside of it. Finally here we get a nice breakout, and this is a, at this point we wouldn't know this was a range still going on, but over here we know this is a range. I also drew in the low point of the last little while, and we can see the price breaks below it and moves back up. So I was just logging in. So this would be a potential false reversal trade, false breakout trade, because we dropped below, we moved back inside. We talk about this in the false breakouts video. It's in the enhancement videos section of the course. We move inside, so we move back inside the old range, and we get a drop and a nice trigger here. So we could have taken this one. I just wasn't quite ready for it, having just logged in. Nice strong up move. Yeah, we are still stuck inside this old range. Now our range low is down here, and at this point, right, if we're watching this in real time, we'd still be thinking that, yeah, this is the high of this range. We have some highs earlier in the day, a little bit further up. So this one, really nice strong run. Compare this to most of the other crap that was going on in here, and this is a little bit different. It's very clean, and we have a nice pop-up. So the thinking on this one was we had a nice run higher. We just had a false breakout at the bottom. When you have a false breakout at the bottom and it fails, where's the price going to go? Likely back up. So we had that strong move back up, and then we're also sitting very close to some magnet areas. If I extend this out, we almost hit the high of this range, and then we know the day highs are just a little bit higher. The highs from the London session are just a bit higher. So the thinking was, if we start moving back up, it would be pretty easy to trigger this level, which causes a little pop. There's some stop losses above here, which then triggers these and pops it higher. So you can see my notes here. Target was, just for the level, this was a 3 pip stop loss and a 7.5 pip target. So the target ended up being just above the prior highs, and so as I was thinking about this trade, I was like, okay, I will take it, but if the price stalls out near these prior levels, especially if it pops through them and then quickly reverses, I'm willing to take my profit. But this seemed like an okay profit target because it was pretty close to those prior highs. We get the pop through, but I'm not expecting a huge move or a huge breakout. Then I'm not interested in going long here, right? Because we had the breakout, we moved above the day high, but we've pulled back a little bit too far. Like this red bar takes us right back into the old range. So this one my cursor's on right now, so you can see we're dropping. We've come too far back into the old range. Ideally, if we're going to trade a breakout, we want to see that price really break out, pull back, and hold very close or above the old range. So that would have looked like this, where we shoot up here and then we pull back to here and then we bounce. This barely gets above the prior highs and then pulls right back into the range. Not something I'm interested in trading. Let's look at my notes there. Not strong enough. This pullback came too far into the range, but it's also too weak to go long, and we didn't have enough selling to go short. We didn't make any lower swing lows. Our last swing low is way down here. So this is just not something. If we look at price waves, we had this drop, a little move up. This drops. This second drop here, it's hard to, let's move that over. So this shows there's not a lot of selling, but we still don't like the overall context. Then we had news coming out at 6:30, so there's, we can't really do anything anyway. News again, a little bit of a pop outside the old range, false breakout again, and then drops. Big run down, no chance for a trend continuation or something. If this had a little pause here and then a drop, may have taken it because we have the potential to run to the bottom of the range. We're not assuming any massive breakout, but that didn't happen. Then the reversal happens and it just runs higher too. So no, at this point we can change our range a little bit. And I'm kind of putting it to best fit or so. So we had this high, this one just barely gets above it. And then we have this one, which just barely gets above it. Pops up. And I just said wait. Because this one, again, came right back into the range. I just want to see what transpires. Why did this drop so much? And it came right back to this. We had this pause here, a very small run up, and then it comes right back. So why did it come all the way back to that swing low? That's not strong buying behavior. So it doesn't matter if the price runs higher after this. My evidence at the time said do not trade, so I won't. I'm going to sit on my hands and see what develops here. Okay, we go back up. Your first impulse if you're sitting there might be like, oh, I should have taken that trade, but we didn't have the evidence, and you can see it didn't pan out. Comes right back. A little bit of a lower swing low there and then shoots right back up, but we've pretty much gotten right back to this high, and that's not great either. So why, if we couldn't get much downside momentum and we can't make a higher swing high, there's no reason to go short and there's no reason to go long. We're just stuck here. We also have the overall thing where we're sitting right on the edge of this breakout range. We're sitting just above day highs, and at this point, here's the day high, and we're fluctuating around it, or at least the prior one. And this is our recent movement, so we're just hovering right near that high. And I don't want to guess which way this is going to go, because if it fails, we're going to drop. If it goes up, we're going to break out. There's no reason to guess. We can wait for the price move to happen, and then, so this one's interesting. Now we have our first significant drop here, and if it sets up where we get a little pullback and then a drop, we're going short. If we shoot back above these highs, then we have a potential long. So we've broken out of this pattern of being stuck again. We were stuck again here, where we can't really make any progress above the initial wave that kind of started it all. So we had this drop, and then we can't make any progress. Here we make a bit of progress to the downside. No chance to go short. It just keeps running higher. So now we have a interesting thing here where we've had a false breakout to the bottom and a move up to a new swing high. We hold that old area, and again, we know it's choppy. So my thinking is I will get into this. I have my target just above these highs. It looks like it's going to take it out. It just took out the lows. Now we're moving up to the highs. If it takes out, these highs, maybe it runs a few pips past. That's about where my target is. This one was 2.5 pips and a 6.2 pip target, 2.5 to 1. And but we know it's choppy. We have seen this all day. That has to be in the back of your mind. This one just takes off, runs, hits the target, no problem. But if this would have stalled out near these prior highs, by all means, I would have been willing to take my profit because of the evidence there. So there's no reason to, if it gets up to here, almost at our target, and then reverses, we'd be willing to hold that because we already know it's choppy. We have a whole bunch of evidence that the price is just barely moving past prior levels and then reversing. And then we basically have the exact same thing that happens here, and I mention it. We just made a slightly higher swing high, and then boom, we go right back to a lower swing low. But this one just barely makes any progress. So we have the same thing happening, lots of patterns playing out over and over again. So now, what's likely to happen? We just had a false breakout out to the upside. We've shown this pattern over and over again throughout the day. We've just made a slightly lower swing low, so we have a rounded top here with our little pullback, more like a consolidation, and then we drop out the bottom. We know it's choppy. The price moved down to this level. I was thinking, I was hoping it would drop below this and take out, but we can't trade on hope. We have to trade based on what the market actually gives us, and it just happened to stall out right at that prior low and then move up, so I had moved my stop loss down below those candles. Basically, because if it consolidates and drops, great. If it consolidates and moves up, who knows what it's going to do. And then this thing just keeps continuing on. Now we're stuck again. We had this big drop and we can't make any progress. So I just decided to stop for the day and record this video for you guys instead, because this was a tough day. I think people could have lost some money, but at the same time, everything that's in the course is here. If we don't have, mainly if we don't have a trend, pretty much none of the patterns are applicable, because rounded tops, rounded bottoms, we need some sort of trending move to reverse. Double pumps, we need a trending move to have a continuation. And at these points, we just get stuck. So we've talked about magnet areas, all these types of things. And so it's all there. It's just, sometimes it's, even with the course and having it all there, it's hard to piece it together. So I thought this was a great day to piece some of all these pieces of information together so that we know when we shouldn't be trading. And I put out a tweet today, which I think is pretty apt. Let's just move it in here. So I day trade for about 1 to 2 hours a day, and it's my ability and choice to watch and not trade for nearly that entire time that saves me much more money than clicking the entry button makes me. Because if we look at this, most of this time, how much of this is actual action where I'm actually like clicking my buy button? You have like maybe half a second to click the buy button here, half a second to click the buy button here, half a second to click the sell button here. That's in, an hour of trading. 60 seconds times 60 minutes, so what is that, 3,600 seconds. You're active, actually physically active, for like 1.5 seconds of that. If you're active too much, then you're going to be entering at positions that are just not great for your strategies. And I think some people get it in their heads that, there's always price movement, so there is always a chance to make money. That's true only if you have a strategy for capitalizing on those types of movements. Most of us, myself, I only have strategies for capitalizing on a few seconds in a day worth of price action. And the rest of it is stuff I do not have the skill for or the strategy for capitalizing on it. So there are times that I just have to let these moves go because I don't know which way the price is going to go. Sure, someone might have been able to jump in and out here and make a few pips. Do I have the strategy for that? No, I didn't see this coming. This told me to stay away and wait for my strategies to develop as opposed to get in. So we want to almost have a mind frame of sit back, Most of the time, there are a few trading opportunities. I'm going to wait for the very best things that I can find. And if there's any evidence of chop, I'm going to stay out. So when we have these and the price just gets stuck, if we have to guess which direction it's going to go, then we have a problem. Whereas if, in this case, we actually had a breakout, we had a pop, I can anticipate what I'm going to do in different scenarios. If the price pulls back a little bit and starts dropping, the market's already told me it broke out to the downside, so I can take that trade, whether it be a rounded top or a trend continuation. Or if it drops and then forms a double pump, I know I'm going short. Then the price does something I don't expect, and it runs, or not that I was expecting it, but this was a potential trade I could have taken it if it had rolled over to the downside. Instead it moves up. Now we have a different set of scenarios. It's like, okay, we just made a higher swing high. If we make a higher swing low, especially if we're kind of outside this old range, we have a nice trigger candle, then I'm going to go long. Keeping in mind the overall context, I know it's choppy. I know we've been moving just beyond prior swing highs. So there's lots of things to keep in mind, but that's why trading takes time. This, even with strategies, it is not a, okay, I'm going to practice this for a month and I'm going to be a great day trader. Being able to do this in real time takes many months of practice and addressing your own trades. And I think that's the important thing. When you've gone through a day, go through your trades, see where you are, getting lots of those losing trades, and see if there's any way to avoid them. Was there evidence of chop already? And if there is, then we need to start weeding those trades out, because chop can kill us. Absolutely. So I hope that helps you out going through this day. I thought it was a great one for review and just showing you some different things, how everything ties together. So until next time, happy trading.